Welcome back. Season 2, Primetime Podcast. George Acosta, William Ledesma, and myself, Marcos Cabral. Charlie Suarez is not joining us at the moment. He may come later, but he's not here at the moment. But shout out to Charlie Suarez that is not here yet. This is the Primetime Podcast. Welcome, everybody. We have been on a very long hiatus. It's been a little over a year and a half, I think, since the last time we shot. We are now in our new office, which we've been here a few months now, and we've obviously changed the look a little bit from the last thing. How we doing, gentlemen?
Moving on
fantastic.
Moving on up.
Yeah, so a lot of changes, man. A lot of changes since the last time we did the show.
Man, a lot has happened since the last time we did the show. It's been a little bananas lately. I mean, what do we remember what the last topic was that we spoke about?
I think loan limits were $300K back then.
$300K. They've doubled since.
That just happened this week. Actually, the loan limits went up.
Yes.
Man, that's been the talk of the town, talk of the industry lately. So where are we at with the loan limits now?
So we're actually looking at conventional purchase prices about $681 with a 5% down. So $681,000 is what you can buy with 5% down, or FHA, you're looking at
460 in Miami-Dade, I think it's.
Yeah, the loan limit, but the actual purchase price with the minimum down payment is like a little bit more than 475.
That's crazy.
Yeah, FHA, that's crazy. That's what's helping bring the values up. You know,
it's good, but
we needed that.
Just looking at where prices are.
Yeah,
the prices are scary high. We don't know what's gonna happen. I mean, let's talk about that, right? Because now we have the government that's getting aggressive with tapering, which is moving mortgage bonds in the wrong direction, which is going to affect interest rates, higher purchase prices. I mean, it could spell some things.
It is, but I guess that's why it's the balance. They talk about tapering, they increase the limit, so now more people that couldn't buy these bigger priced houses, now they can. And on the other side, tapering means that some of the rates are going to start, increasing, and some people that are going to maybe get off the race from buying a house, but we have enough. There's so much demand that we're good.
I don't know. To me, it feels. I mean, I got into the industry in 2005, right?
And it smells kind of
so familiar. In the sense, and I'll tell you, in the sense, I remember. Look, when I started in 2005,
I've read the book before. When
I started in 2005,
story.
there was a lot of equity in homes because of the appreciation of value. I think the newest report that came out was that home values and home equities at an all-time high is $21 trillion in home equity nationwide. With rates going up, I think that it smells like 2005, where you're selling debt consolidations, tap into your equity, pay off stuff, that type of world. I think we're gonna have. I think even with rates go up next year, I think we're gonna still have the opportunity to do a lot of cash out refis for debt consolidation. There's gonna be little shops that are gonna pop up and start selling that.
I agree. Homeowners right now are very, very equity rich.
Yes.
So I think that, next year, refinances will slow down due to the, if you're trying to do a rating term with a lower rate.
We need that button that they have on the Mad Money. Sell.
They're nuts. They know nothing. But
that is a good question. I mean, do we sell? Do we hold? Do we keep on with? Look, I think cash flow is gonna continue. Even if I'm always say, for me, fuck the equity. I want cash flow, right? So
yeah.
I don't care what it's worth, where it goes up and down. If the cash flow keeps going, you can still pay your bills, right? And eventually things will come back around and catch up. I don't think anything's heading towards a major crash, but like I said, it does smell a lot like 2005, and we all know what happened to after 2005. 2006 was good, 2007, and
unless
but then it restarted with the sound effects, by
the way. Lewis, we need you on the sound effects board. We need you doing the thing. We need that for the next one. But I agree. I mean,
Now, 2005 was hard sales. I remember we doing radio shows where we would pitch second mortgages and then convert it into full debt consolidations. Yeah. I think a lot of the good salesmen were born in that era, which made really good mortgage professionals in the new era after that. And I feel like the younger generation is going to be a good opportunity for a younger generation to be born in the next 24 months. I really do believe that, and I was at the career fair the other day at Gold Coast, And you do see a lot of young kids that same thing that happened in '05, where you would hear a lot of people making good money in the real estate game or in the mortgage game, and now they're leaving their school or leaving their job and say, all right, let me dabble in this. And I think that the next 24 months, there's going to be a really good opportunity to train the newer generation that's going to lead in the next phase. And,
So let me clarify.
So
Are you
not
saying-
every
Go.
20-something-year-old wants to be a YouTuber. Then is basically what you're saying. We're gonna be able to continue. The show goes on. The show goes on.
They're harder to find. I will say they're harder to find. I always say this, and it's. I have this theory where, when Hollywood comes out with certain types of genres and certain types of movies,
Yes.
there's a new generation
I agree.
of individuals. We saw it back in '05, '06 when Boiler Room would come out.
Yes.
And these movies.
Glengarry Glen
There was
Ross.
there was a slight.
Wolf of Wall Street in 2013.
Yes, there's a slight uptick in that in Wolf of Wall Street.
Yep.
It gave a kind of
I
people
agree.
that kind of let's hustle, let's get back into it.
We
I
need
think
a new
the last 36 months we've seen a lot of complacency and laziness. I
Yeah.
think COVID has made a lot of people just kind of kick it, and I think we need
too many Marvel
Hollywood.
movies.
We need Hollywood to come
Too
out
many
with a new
Marvel
movie.
movies
There
and
he is.
Spider-Mans.
What's up,
Stop
boys?
remaking Spider-Man.
Yeah,
And let's
yeah. We need to
let's
Let's
remake
remake
Boiler
Boiler
Room.
Room.
We need-
Let's remake Boiler
we
Room.
need another Boiler Room.
We need another Boiler Room.
begging
Glengarry Glen Ross, 2021.
Yes.
That's
Yes.
what we need.
Yes.
Yes,
Right?
and
I agree.
I think, for me personally, I mean, obviously now I'm more in the management role of training and all that, and I think that in me personally brings a new a sense of passion to look at a young 22, 23-year-old who's actually hungry, actually wants to absorb and do the work and put in the time to actually learn it and make the best of it.
Yeah.
It's hard to find those individuals
I agree.
in this day and
Very
age.
hard.
And I think that, again, if Hollywood comes out with a couple good movies, I think it becomes like
I think it'll spark it
It'll
again.
spark it again.
It'll
It
spark
gives-
it again.
Gives you a little tickle to start doing it.
I mean, think about how excited we were when we got in the mortgage industry. Like
Yeah.
you said, what the movies we grew up on, the hustle mentality we grew up on. Yeah, I think that we need that. We need
Well,
to.
when I started, they basically I haven't seen the movies. They made me watch them, and then to get pumped up to do it. So I think maybe we should.
you know
just-
that's actually when I first got hired in the mortgage industry. That was part of the interview process. Have you seen these movies?
Yeah.
Because you want to
You
know.
need to watch those
Yeah,
to
you
see what
wanna
it is
know
that we
what's
do here.
The personality. You want to know what kind of individual you're hiring. What
Yeah.
kind of are they moldable? Are they trainable? And are they a good fit for what you're going to be needing in that aspect? And I think that's very key. I think that when you're interviewing somebody, culturally, you want to know where you're at. Where's your headspace at?
Yeah.
Are you a piker? Remember that? Are you a piker who walks at the bell at 5:00, or are you the guy who's going to put in the work and stay till late night? And
Piker asks about vacation hours.
yeah, what vacation? Exactly. So bring it on. I mean, I'm dying for.
I could.
None of
Maybe
this-
we need to produce it ourselves. Maybe we
Yeah.
need to put this thing
I
together.
would love to. Like half the interviews that we did in the last 24 months is like, do you guys offer salary or do you guys provide leads? No, we don't fucking provide salary. What's wrong with you?
Goodbye.
Fine. Next.
Next. Don't even take a bait.
Do I have to be here 9 to 5?
That is
Do I
that
get
is
an
the
hour
most
lunch
common
break?
thing. Like
Motherfucker, I just started having lunch a
do you
year
do?
ago. I haven't had lunch in 20 years. What are you talking about?
Lunch. Lunch is for wimps.
Yeah.
Hey, look who joined us.
Hello.
Hello, hunky dory.
What's
Charlie
going on,
Suarez. Fashionably late. I think you did it on purpose, by the way, because I think you wanted to make an entrance
No. I had
and show off the khakis.
I had an interview.
That's what it was. He wanted to show off the khakis to the camera.
No. I had an interview today with someone who didn't ask me if we had lunchtime.
You were late to our first show. Our first show. We were opening up our first show for the season.
All right. Wow.
Welcome, brother. How you doing? How are
I'm doing
things?
Good. It's nice to be here.
It's great to
Willie?
see you.
What's
It's
up,
been
Charlie?
it's been a long time since we were all together on the podcast, and yeah, man, we're kind of just getting acquainted, getting the rust off. If the show sucks, it is what it is. Deal with it. Episode 2 will probably be better, but right now we're just trying to get back in the swing of things. Chuck, so how are things?
Things are starting to shape up a little bit. We're here now entering our heavy season for recruiting, so trying to put some stuff together. But there's rumors out there that you're putting together like a mega team for the recruiting and platform.
Well, one thing that we like to do here is we like to assemble teams. We like to assemble and rock solid teams. So we have our underwriting team, which is extremely hardcore, and we've done a great job at that. Closing team, processing team, management team, paper pushing team, loan officer team, cleaning team, shopping team, Lewis with the Air Jordans team. I mean, it's what we do. So it was only fitting that we put together a rock solid recruiting team to help our loan. And mind you, this recruiting team doesn't just it's not just about recruiting loan officers. It's about recruiting realtors for our loan officers. It's about recruiting LOs for our team leaders, sales managers. I mean, they're just going to be focused on all aspects of it. And yes, they are fully up and running, and it's so far so good, man. We're excited about it.
So before you rudely interrupted our podcast,
With the fashionably late entrance.
We were actually bringing up everybody, obviously, on the new changes since our last, because again, a lot has changed since our last show. New loan limits. We just talked about our new loan limits. Kind of where the industry's heading, where rates are heading next year. I think that also something that we should mention also is the uptick in the non-QM space. I think that's becoming, and again, going back to
2005.
Yes.
it's like 05, 06. The non-QM stuff
hot.
It's becoming hotter. It's becoming
the
more
thing.
frequent. Rates are not as bad on the non-QM space
Not
anymore.
bad at all. Not bad at all.
So that again has a lot to do
So
with.
does it make you feel like the fact that that's entering the market so hardcore, it is impending doom? Is it really? Does
I
it
think
really
it's just-
smell like it?
I think it's just part of the natural cycle. I mean, we've always seen non-QM be very tied to the stock market and very, very tied to secondary market on that aspect. The same way non-QM comes in and is very aggressive, and here in one day, it literally one day to the next goes away. And I think that's when it has a big effect on the market.
But look, I think we got to say a couple clear differences. The non-QM, the rates are way better than it was last time.
100%.
Equities, what they're asking, they've learned for the most part from their mistakes, where there's still going to be way better loans, way better loans out there that I don't think like you said, the impending doom is going to be as bad. Like, yeah, I'm expecting down the line
Well,
something.
you know what?
But
08, I don't think, and I think most would agree, 08 will never happen again.
that's what I'm trying to say.
Right? No, that will never happen again. But there will be a market correction. No, not to that level. Because if you think about it, dude,
100% financing
That's
with just
the-
credit?
No,
That'll
100%
never-
financing. What about 100% financing with a written VOE from the borrower on how much they make?
Okay,
and,
but let's talk about 100%
and the
financing.
negative
Hold on.
AM.
Hold on,
Who
hold on,
remembers
hold
the
on.
negative AM?
Yes.
Hold on 1 second.
You know,
If a
that's
property
not happening.
appraises, if a property appraises from 1 year to the next 60%, and then you're offering a non-QM product at 90% LTV, with very minimal documentation, in a market correction, yes, I mean that's something to think about. And again, I think the reason why non-QM is becoming much more aggressive is because of all these secondary investors that are coming in on the back end, saying yes, we're providing liquidity for it. It's free reigns. Go ahead and sell this. And I see it. I mean, we saw it the other day. It was like a 90% P&L only thing. It was just like
That sounds fun. That sounds fun.
Yes, but the point
The
is,
show
it's
goes
not,
on.
It's not 100%. Somebody has to still put some money in there. It's gonna make it a little bit harder.
there's
for them
still
to
some
walk
skin in the
away.
game. Yeah, there's still some skin in the game.
It's not the same.
It really isn't the same. I don't think it's the same. But there's still going to be market corrections. It's just historic. I mean, it's going to happen, right?
I'm looking at it. I don't see it as this is something that is normal. I think I feel like it's 05, 06 right now. I think that it's not going to be a huge crash, but definitely prepare for 24 months to feel something.
To have a market correction.
Something.
slight-
There's a lot going on.
a slight tickle.
There's a lot going on with hyperinflation. There's a lot going on with mortgage-backed securities and rates going up. There's a lot of different things that could
There's a lot.
turn into a nice little soup of.
There is a lot.
Very good.
Now I know our buddy over here in the corner, very into politics, very into
He wants to talk about the Omicron virus.
Omicron virus.
No, I'm not talking about that today. So I wanted to bring up.
Wait, did you know that Omicron, if you rearrange the words or the letters, it says moronic? Did you know that?
No.
Do it. It's the moronic virus.
So if you guys
Moronic virus.
So
Oh,
if
that's
you guys
awesome.
follow up a little bit yesterday on some of the stuff they talked about, they did talk about all those programs which are ending, hopefully now this month, when it comes to those who were not were able to afford their rent. So those are ending. The other thing now they're talking about is how many of those properties are going into foreclosure, and there's a good bunch of them that are going into foreclosure. So are they going to live out the foreclosure and hopefully get a short sale because of the equity in the houses right now? That's they're talking about. But they're talking also about the first quarter, probably close to 300,000 homes will go back into inventory.
No, really.
Yeah, they were talking about that yesterday. So I think there is a possibility for definitely the inventory to get much better again. But we have to see and wait, because what happens now? Everybody's out there now knowing that that's it. It's over for them when it comes to taking a break on their mortgage. Are they going to extend it?
So there's going to be a potential 300,000 Airbnbs hitting next year?
Just about.
Basically is what you're telling me?
Just about.
That sounds promising.
I would
That sounds
say-
promising.
I would say yes and no, because unfortunately those with the foreclosure issues right now, they're done. You know, those are, and there's been a large amount of groups of banks right now actually implementing the foreclosure already on these properties because of there's no tomorrow for them. They lived it off. They lived for how long now? Almost 2 years without paying a mortgage. So I think we're going to see that again. So going back to 2008, I don't think so. I just think that they're going to bring out some programs for people to look. Right now, don't we have a new medical program at 100% financing?
Yes. We're getting aggressive.
I mean, I see what you're saying, and my thing is, I don't know. Like firsthand clients I've seen that went through the forbearance, and out of 30 of them that I know that went through it, only one ended up like still working it out. Everything got worked out.
Yeah, but there's actually nationwide.
Well, the
there's
majority.
millions of them.
No, I'm just putting the picture. We're talking about nationwide numbers compared to, like, if I spoke to 30 out of 30, only one is still dealing with it because they resolved, they moved it, or they sold the house, they did something. Like, it's so unpredictable what's gonna happen. Yeah, these 300,000.
But I don't think they'll go to foreclosure.
That's what I'm saying. They worked something out.
They're going to work it out. Because regardless
even
of
if
the
it's
fact, think about it this way. There's still a huge inventory issue. So those people still need a home. Rents are at all-time highs. You're going to tell me they're not going to do everything in their possibility just to work it out with their bank?
Rents are ridiculous, by the way.
Oh, the rents
Especially
are.
here in Miami. Rents are out of control.
Out of control.
But also what they're also talking about is individuals got into properties that they really didn't like just to get away from the rental building where they were riding in an elevator with 100 people every day.
Right.
So a lot of them got into properties that they really don't care to keep the properties. Bottom line. Now, the other part of it is a lot of them don't want to let go of the property. Why? Because of the actual increase in prices that have happened in the last 2 years.
Right.
So it's a catch-22, but those numbers are starting to come out, and believe it or not, they're pretty high numbers of what they're going to see out there in the market right now.
I think there's definitely going to be a lot of short sales in the next year, couple years or so. I think so.
What I'm seeing is short payoffs. So it's like you're negotiating with your bank to, like, let's say
Like a short refi?
Like a short refi. I've seen people discussing it because they're not being reported
Already?
late.
Now?
Yeah,
I haven't heard of that. That's insane.
I one of an agent that I know actually talks to people because he wants to buy it, but then he's like, "Look, I can give you a solution. Try doing this first." And when the bank denied doing the modification or whatever, then say, "Okay, look, remove these fees, and we'll be able to do this or something." So it's kind of like a short sale, And it's like I said, there are so many options that people aren't aware of. That those 300,000 families that are gonna have, there's still more options for them before it becomes like.
Yeah, because banks learned from what happened previously, so they're going to try to
Equity is
adjust.
so high right now that
Equity is so high.
Another, switching the tide a little bit, another boom that's been happening, and everybody's wondering when it's going to crash or if it's going to crash, is the cryptocurrency space. We saw it uptick in 2017. Now lately, it's an all-time high. All crypto. But I think what's changed a lot, and I think that if we knew this before we pulled the trigger on this office, it's this whole metaverse situation, metaverse and Web 3.0.
We should have opened the office in
I've
the
been-
metaverse.
Yes. So
For those of you guys don't know, there's a bunch of different companies creating
We can still do it.
virtual augmented reality world.
There's already
we're all gonna
realtors,
live
by
in.
the way,
Yes,
in the
I
metaverse.
saw that article.
Right.
There's realtors in
And
the
virtual
metaverse.
plots of land.
Where do you get your license through? for
virtual
that?
real estate? How about that?
Is it Facebook?
Foreclose on a
Facebook have the
virtual
school?
real estate.
So how do you use that virtual
So check it
real
out.
estate?
So apparently, this is what I'm gathering from the little.
Just put on your
research I've done.
headset and you hang out in your
Right.
land
Yeah.
Right. So Facebook
from the comfort of your
Facebook
own home
owns
in
Oculus.
the real world.
Facebook owns
Cool.
Oculus, for example, right? You're gonna enter into this virtual space with your avatar, and there's a virtual world where plots of land are being sold, and actual companies are building upon these virtual lands. So, like right now, we can have a PRMG office in this virtual land where somebody comes in with their avatar and says, "Hey, I want to apply for a mortgage," and they bring all their credentials and everything with them, and it's all being done on this virtual
So you
world.
can finally be a little green alien in this world.
Yes.
The one that you always wanted to be, Chuck.
Nano.
Think how cool.
So
think how
now,
cool
what do
that
we
could
do
be.
with this 15,000 square foot office?
It's fine. We can all just have our headsets and live in the metaverse in our office.
I'm gonna drive to the office every day, put on
Put
my
on the headset.
and then onto the virtual. You know,
There you go.
That's what it is.
yeah.
I just close my door.
Hey,
'cause
it's gonna be amazing.
You think so? You think it's all?
You know what I was thinking now that he says that we can make this office into like a for students to live in here. We'll put some Murphy beds up and we'll rent it out. To
That's
the
it.
students.
Every single office will
Every
be a little
single
dorm.
office is a little dorm,
I like
yeah.
it. I
What do you
like
think about
everybody
that?
in there with their goggles and just staring in the
There you go.
skies
Yeah.
in the metaverse.
We rent them.
Sounds amazing. I'm excited. I'm
Where
pumped.
you today? No, I'm
super
I'm in
pumped.
Hawaii. Oh, nice.
This is insane.
I don't know
And
how.
think about it
I don't
this
know
way.
how
You
blockchain is
you
going
can
to
be
change.
you can be in Hawaii, put a little fan on. You're on the beach in
There
Hawaii
you go.
with the fan blowing in your face, and you're literally in there.
Yeah.
It's gonna be amazing.
You think so?
Tourism will drop to the all-time lows. No one will fly ever again. It's cool. I mean,
Open houses are going to be
I'm
definitely
super-
on this.
Yes.
open house. I'm freaked out.
They're
Actually,
doing.
I don't
The
know
technology's
why.
there. They're just putting it together.
This
Put
is
it together.
insane.
Open houses, virtual.
So now we have to go get our mortgage and real estate licenses in the school of Facebook. And that's going to be the new license. Yeah, it's no longer going to be the
how is
DBPR
this-
or the NMLS.
But this whole virtual world, how is this going to basically affect the new militia that DeSantis is working on? Like,
Did you hear about that today?
No, I didn't.
That just came out this
I was
morning.
just wondering because are they gonna be a virtual militia or like a like how's this gonna work?
DeSantis proposes a new civilian military force in Florida that he would control. His own private army.
What article are you
The
reading?
country of Florida. We've
No,
looked it up
we
everywhere.
literally
It's a
looked it
real
up
thing.
everywhere. It's real.
I don't know. This
I'm a-
is super
listen, I'm a
freaky.
fan. I'm a
We
fan
gotta
of
talk
DeSantis,
about that
bro.
on episode 2. We gotta dig a little bit more and come back episode 2 and talk about it.
Maybe we'll have him
But-
on. We'll have a.
But I like where his head's at. I just,
But
you know,
let me tell you, I wonder if it's because he made a remark the other day, and it came out all over the news too, that he was going to use ICE to pick up all the people who came over, the illegals who came over, that they dumped over the night in the airport in Jacksonville, and he's going to pick them all up and send them back to Delaware.
so he's proposing.
So I wonder if that's the militia he's talking about.
He's proposing bringing it back with a volunteer force of 200 civilians, and he's seeking $3.5 million from the state for startup costs to train and equip them.
I'm gonna say this. I'm gonna go on a limb. Call it whatever you want to call it, but I think DeSantis is helping us maintain the values of real estate in Florida.
Thanks to him is going
Yeah.
up. Absolutely,
So,
everybody's moving
I'm
in.
a fan. I'm a fan.
I'm definitely a fan. I like where his head's at. He's aggressive, and
Just don't California, my Florida.
just don't California, my Florida. Listen, even Nancy Pelosi supposedly just moved here, and with that, we're gonna end the show. Welcome, Nancy, to the state of Florida.
Yeah.
Hey, we'll catch you on episode 2. Thank you for joining in, and I was glad that we were able to get the rust off.
There we
And
go.
welcome
And
back
it'll be
to the
better next
Prime
time.
Time podcast at our new office down here in downtown Doral. We'll see you next time.